Hi, and a very good morning, and welcome to Solving the Tax Avoidance Scheme Disaster webinar. First, let me introduce myself if this is your first time attending one of our presentation. My name is Simone, and I'm the head of the Advocate Department. Now, there's going to be lots of information being shared today, so I hope you've got a pen and paper ready. Now, there are going to be some handouts that will complement today's presentation. Now, this webinar is being recorded. It will be uploaded onto the platform along with the handouts as well. So don't worry if you think, oh God, I won't be able to remember everything today. You can rewatch it back on the platform as well, okay? And you can download those handouts too. Thank you so much for submitting your question at registration. We will try and go through as many as possible, but you may find your question will be answered during the presentation. Now, I know there's a lot of you on here already. I can see you all coming through. Now, if for some reason we can't get through to the questions, do not worry, because in the next few days, our speaker, along with Andy Benson, who's head of Ross Media, will be doing a separate presentation and we'll go through every question that you will have. Now, what I will be doing to all attendees today, I will be sending you out an email with a link so you can add your additional questions to that as well. So everything will be covered, okay? So there's some other links that we will be sharing. They will be coming up in today's presentation, so keep an eye on those links as well. So are we ready? Shall I introduce you to our speaker? He is the founder and the president of the Republic of Old Souls. It's Ian Clifford. Good morning, Ian. How are you today?
Well, I'm going to say good morning today because I think most of our audience is probably, not all, but most is probably from the UK, because this is particularly a problem in the UK market. So
huge.
I'm assuming that that the majority of people here today are from the UK, and this is a subject which is quite dear to my heart because I've known about this for many years. Back in the day when I was doing wealth management, if you know my background, I had a whole network of accountants that used to refer their clients to me for me to do my financial planning and wealth management stuff, solutions for their clients. And 30 years ago, when I was deeply involved in all those things, tax avoidance was a really big subject. A lot of people were seeking tax avoidance schemes because there were lots of them available in the marketplace. There was a whole industry of people designing tax avoidance schemes, and many of them came with very credible opinions from what used to be Queen's Counsel, tax opinions from Queen's Counsel, now King's Counsel. And there were very high profile promoters of these schemes. And typically, just so everybody here understands what this was about, if you'd earned £1 million profit in a year and you didn't want to pay, easy numbers, 400,000 in tax, then you could put your tax avoidance scheme in place, and instead of paying 400,000 in tax out of your million, you might pay 100,000 in fees to the promoters of the scheme, and therefore save 30,000. So that's really simple. There was many schemes, many fee structures, many different tax rates, but that's generally speaking why a lot of people got involved in these. That's the higher earners. But then there are other people who got involved because they were like an IT contractor, and they were offered a contract and they took the contract on, and with the contract came the remuneration plan, which was basically, it was instead of a PAYE arrangement, it was a loan from what's called an employee benefit trust. And a lot of the IT contractors wanted the work. That was how they were going to get paid. There wasn't a PAYE option. So they took the EBT loan. And the EBT loan was backed up by tax opinions, and people who were wanting the work just went along with it. Everybody else they knew was doing it, so they went along with it. And this is how this problem has sort of evolved over at least 30 years. And then you've had, at the other end of the spectrum, you've got the really high net worth targets for now the HMRC, people like David Beckham, people like Robbie Williams, people who are very, very high levels of earnings, lots of professional footballers, even Alex Ferguson, then went into other types of tax avoidance schemes called film partnerships, where they put some of their earnings into a partnership, and the partnership made a movie, and their contribution to the movie was allegedly able to be set off against their profits. And then the movie was made, everybody was happy with the movie, and the promoters made huge fees, whilst the people like Alex Ferguson and others, David Beckham, etc., they sheltered their taxes, reduced their tax bill, whilst the films were made, so everybody was happy. And then you've then got a problem later on when HMRC basically retrospectively change the interpretation of tax law, and then say, well, actually, that avoidance scheme you did 10 years ago, 15 years ago, we want the tax that you should have paid on the earnings from 15 plus years ago. And many of these high profile celebrities have already spent the money. So it's not like they're sitting there with the taxes in reserve that they sheltered. They've spent it. And if you go back down to the other end of the spectrum, the IT contractors that had these loans instead of the PAYE, or just a standard invoice where they would pay tax on the invoice, they haven't got the money. They literally don't have the money, because it's like, who's got their PAYE from 20 years ago? We don't store it up as savings. If people are on PAYE, you receive it, you spend it. You receive it, you spend it. So it's not like these people that have been caught by this have got a reserve saved up somewhere. No, they spent the tax saving, because that was the whole purpose of what they were doing, is they were trying to avoid taxes, or they just didn't have a choice. They were just given the loan scheme, and they didn't really have a choice, because if you didn't want the loan scheme, you didn't get the work. So that's one end of the spectrum. And at the other end of the spectrum, you've got Robbie Williams and people like that with enormous earnings, who were doing different types of tax avoidance schemes. So this problem isn't just one category. This problem is very wide. There's a wide range of people affected by this. And HMRC, and I've had some battles with HMRC, they are psychopathic. I have to tell you, without my first-hand experience, I might have doubted that. But there are people that work at HMRC who are recruited because they are psychopathic. They don't care whether your life is going to be turned upside down, inside and out, and you might lose everything you've got. As far as they're concerned, if they say you owe the tax, then you owe the tax. And they don't care what the consequences are on your life, even though they've got pamphlets and things they say on their website about how compassionate they are to the taxpayer. I can tell you that they're not. And I have first-hand experience of it. I once had a tax investigation. It went on for months. And the people that came to do the investigation If you could picture a scene from a scene from a Second World War movie where you've got the Gestapo coming around, shining a light in your face in a room, it's just a bit like that. So, this is a big problem for many people. It's a huge problem. I think so far, sadly, there's been 11 suicides from the Loan Charge Action Group, of which is over 50,000, maybe way more than that, of people that are directly affected by this. And as far as I can see, and I had looked around, I don't think there's any remedies apart from what we're going to talk about today. And then you've got another phenomena, which is you've got people like Dan Needle, who's very topical at the moment. You probably, if you're in our Telegram channel, see all the toing and froings that are going on between me and Dan Needle. You got people like Dan Needle who are having a go at the tax avoidance schemes, but not having a go at the promoters, which I think is very, very interesting. So Needle is saying that the tax avoidance schemes, were dysfunctional and all these kind of things, but he's not actually saying, well, the people that promoted them need to pay compensation to those affected, apart from one guy, which is Paul Baxendale Walker, who I met, and I have to tell you, this is I won't tell you the whole story, but I met him once in Mayfair in London, and I had been looking at his tax avoidance scheme, and I had some very, very high net worth clients years and years ago, and I had a meeting with him to explore some questions that I had, because I didn't think his scheme worked. And the arrogance of the man was just off the chart. This is just to put it into context. Paul Baxendale Walker, he created an EBT scheme for Rangers Football Club, the Scottish football club Rangers United, and that's what put them into receivership, because it went wrong. And HMRC defeated Rangers Football Club, took about 8-9 years, loads of court cases, and that scheme was developed by Paul Baxendale Walker for Rangers Football Club. I met Paul Baxendale Walker in Mayfair and challenged him on his scheme, and he basically run me out of his office, telling me that I was an idiot because he was far superior in his technical understanding of the law and the taxes than I was. Well, I think I was proven right, because his scheme didn't work. And many people, there's I'd say probably more than £1 billion worth of taxes was put through the Paul Baxendale Walker Remuneration Trust, which is what he was promoting for about 20 years. And many people promoted it, and many people took very high earnings from the promotion of it. And I said, I can't remember exactly when it was, but it's more than 15 years ago. I said, this scheme doesn't work. And I had very good reasons to say that. But lots of people didn't listen to me because they wanted to get their commission. So the promoters got their commission. The people who wanted to use the scheme used it and thought that they'd sheltered themselves from taxes. And now they're finding out differently. So, there's, the chickens have come home to roost, as they say. This is what we're going to talk about. It's a massive problem. And before we get into the content, I'm going to just put this into your minds. We can do all of these things that I'm going to talk about on this webinar. We can obviously do lots of things already, but if this is a new protocol, we need people to express an interest in it to go and build it. So there's many things in this webinar that we can already do, but there's certain aspects of this solution that we can't do on Monday, but we can do it very soon, is subject to there being interest in it. So if you know people that are affected by the loan charge problem, the disguised remuneration problem is what HMRC describe it as, we need you to refer them to watch this webinar. That's all we want you to do, is get them to watch this webinar. Because there is no other remedy out there in the UK that I am aware of. This is the only remedy that I am aware of. So if you know people in that position and they want to review whether this is right for them, get them to watch this webinar. And then if there's enough demand, then we will build it, and it won't take long because many of the components we've already got. I mean, and we're already, we're already in position to deliver on many of the components of this presentation. So I wanted to put that out up front, because a lot of people seem to believe that we can just magically create a department and roll it all out, in days. And that's not quite as easy as that. We have to put a few things in place. But we're not going to go and do all that if hardly anybody's interested in the remedy, because what would be the point of investing all that time and resource if you haven't got a demand for the remedy? Anyway, let's move on to the first slide, please. And there you go. It's the illusion of tax avoidance. And it really is an illusion. I mean, basically, none of the schemes that have been promoted across the last 30 years have actually worked. I can't find one that actually worked. And yet they were marketed by many, many organizations. Lots of people earned huge amounts of commission selling these schemes. And yet not one of them has actually worked that I am aware of. If somebody knows of one that's worked and is still working and isn't under any kind of a challenge by HMRC, then I'd love to know what it is, because I couldn't find one. There are people who believe that things are going to work, but again, that's like it's a bit illusion. It's a bit of another illusion if they think that what they're doing might work from a tax avoidance point of view. HMRC started closing it down with something called DOTAS. And that they were talking about that when I was practicing in my wealth management days many years ago, where you had to register your scheme with HMRC before you promoted it, and then they would review it and tell you whether they thought it worked or not. That came in at the back end of this period of very high level of promotion of tax avoidance schemes. And obviously they're only going to say things work that aren't that attractive, aren't they? So you can kind of imagine what schemes they're going to say, yeah, that one works, but it's probably not much different from paying the taxes. So there you go. The scale was enormous. A lot of people were probably not aware of what was going on in tax avoidance because they didn't ever think about it. It wasn't something which was attractive for them. So therefore a big element of the UK population probably doesn't even know there's a problem. But for those who've got the problem, they absolutely know it. And I can assure you that that's what they think about most of the time. Next slide. And Paul Baxendale Walker was very pivotal in the design of many of the schemes. He came up with the EBT, that's the Employee Benefit Trust. He came up with it probably 25, 30 years ago. He was actually struck off. He was a barrister, a tax barrister, very highly qualified tax barrister that was struck off for dishonesty. And what he did was he then wrote a book on what's called the Remuneration Trust, which was the name that he gave it. He wrote a book and he started promoting it, and many people were very impressed with his presentation of how it worked. And he had a very domineering character. And he's also Baxendale Walker isn't actually his name, because his name is Paul Chaplin. And strangely enough, it's a bit of an unusual combination, but he actually bought porn magazines, and he was promoting porn magazines in parallel to being a tax avoidance ex-barrister, promoting his tax avoidance schemes. And a bit like Playboy TV, he had all kinds of media that was focusing on the porn industry. And I don't mean porn as in taking your ring down to the shop to get a few quid. I'm talking about the other porn. So, so that was Paul Chaplin, who was known in the tax avoidance circles as Paul Baxendale Walker. And he created a whole range of schemes and had a network of promoters, mostly in London, I have to say, that were very high end, very flash offices, very prestigious locations that were inviting people to look into the remuneration scheme. Here's Paul's book. Paul's high profile. A lot of people looked into his background and didn't like what they saw, but a lot of people didn't look into his background and just went along with the scheme because the savings were very substantial. The tax savings were very substantial. And what he was doing, I mean, I could go on about this for ages because I remember doing a forensic audit on it when I first came across it. Basically, what he was doing, is if you had a company and it had made a lot of profit, you could set up an offshore company, which was a trust in Belize or some other offshore area like BVI or somewhere, Caymans or wherever. Belize was one of his most popular. You set up a trust there, and the trust, you would make contributions to the trust, and the trust would provide a financing arrangement to your company, and the contributions would be like putting your contributions into a pension. They would be able to be set off against your profit. So if you've made 10 million profit or 1 million profit, and you put a big share of that into your trust, that contribution to the trust was like putting funds into a pension. It's offset against your profit. And then you took a loan out from the trust company in Belize, and that's how you live. So if you were a director of a company that was making a lot of profit, you could take loans from the offshore trust. And those loans were then not taxable because you don't pay tax on loans. And then you could save personal tax, corporate tax, national insurance, blah, blah, blah. And it was substantially better. Your net result was substantially greater than it would have been if you'd been paying the corporate tax, the personal tax, national insurance contributions, etc., etc. So it was very, very attractive. And typically the promoters got 10% of your earnings. So if you're earning 10 million, the promoter was taking 1 million in commission, just to put that into context, right? But you paid less tax, but the promoter got 10%. And that was Baxendale Walker, who was the main promoter of these schemes. And then he paid 4, 5, 6% to introducers into his agent network to bring him the clients or the customers, yeah, of which there were many, many thousands all over the UK. That was what was going on. Next slide. Mis-selling. I mean, basically, these promoters, you see, taxes are not a regulated subject. So you can set up a tax practice and give people guidance on taxes without actually having to have any kind of license to do it. You're not filing their tax returns for them, but you might be providing a tax avoidance scheme, and you don't need to be licensed to provide the scheme. And especially if the scheme is running out of Belize or running out of the BVIs or somewhere like that, you don't have to get a license from the UK to promote that kind of a scheme. So many people jumped on the bandwagon, mis-selling these tax avoidance schemes because they could earn a very big commission. They didn't need a license, although they appeared to be very professional. And I did know quite a few of them who had very prestigious offices in central London, in Piccadilly, in Mayfair, in Belgravia, or in places like this. Very flash offices, very impressive. You know, guys driving around in big Bentleys, and they take you out to dinner and, you know, put you up at the Ritz and stuff like this. Very, very high-end stuff was going on. Those guys that were doing that didn't have to be regulated or licensed or anything. but they looked very professional if you didn't realize what was going on. And they had accountants as well. They had many accountants that would back up what they were promoting, because there was a network of accountants, chartered accountants, that were taking part in these schemes as well. So it looked very legit. If you were a business owner and some accountancy firm is saying, yeah, this works, you've got a book that says it works, very impressive book, and you've got some promoter that's got really big sort of presence in London, flash offices and all the rest of it, and you can make massive tax savings, or it appears you can make massive tax savings. You put all of those components together and you can imagine why so many people bought these schemes. I warned against it from the beginning. But there you go. It's human nature, I think, to go towards what appears to be very attractive, and sometimes ignore the potential risks. And there were loads of risks here, as is now being experienced. So that's what was going on in mis-selling. It wasn't just the really high-end promotion. As I mentioned earlier, you had the ordinary folk with ordinary sort of level wages or remuneration. They took a position. They signed a contract with a contracting firm. The only way they could get their remuneration was through signing the contract, and they got a loan from some scheme. It was like an umbrella scheme that provided them with loans, and that's how everybody was doing it. So it's like, well, everybody else is doing it, I'll do it as well. I want the work, and it appears to work. Everybody's doing it, so let's crack on and get on with it. And that's why 50,000 plus people in the UK today in the Loan Charge Action Group have been lobbying Parliament. That's never going to work. Have been doing marches. That's never going to work. Have been, getting newspaper articles done. That's never going to work either. And they've been fighting, although they've made a little bit of difference. They basically nobody's going after the promoters. People are attacking HMRC because HMRC allegedly has changed tax legislation. HMRC will say, well, we didn't change legislation. We just interpreted it differently today than we did 20 years ago. Well, that's an interesting way of changing things, is saying that you changed the interpretation without changing the thing. So that's their excuse. They've won in court with it, so that's all they care about, yeah? So obviously they're going to win in the courtroom, aren't they? Because the judge is no doubt going to favour HMRC's presentment over anybody else's, yeah? Because it's all a little bit rigged behind the scenes. So, but nobody's actually having a go at the promoters. They're all having a go at HMRC, but they're not having a go at, and they're having a go at Parliament, and they're having a go at some of the opinions that were written about whether the schemes were lawful or not, but nobody appears to be having a go at the promoters. And in the art of legal warfare, you've got to find the enemy's weakness, haven't you? Well, I think the weakness is the promoters, not the HMRC. You're not going to beat them, and you're probably not going to beat the people who wrote the tax opinions, because they've got lots of caveats in their opinions that say this is not tax advice. This is just my opinion. So if you're a barrister and you're writing an opinion, you're not taking any liability on the opinion, because you actually say that in the opinion. So those that have got the liabilities are who? The promoters. But nobody's focusing on them. Everybody's focusing on HMRC and the people that wrote the opinions. Next slide. And this was the real big tipping point, as I mentioned earlier. The EBT that Rangers Football Club used, and all the football players at Rangers Football Club are all getting loans from EBTs. Many of the high-paid staff at Rangers Football Club were getting the loans from these EBT structures. And then HMRC went after Rangers Football Club. They didn't like the scheme. It went into, there's a whole, I mean, you could write a book on this subject alone of how many court cases there were, how many appeals there were, the fact that Rangers Football Club went into receivership, fell from the Scottish Premier League all the way down to the lower leagues because of this, almost went out of business, all because of the Baxendale Walker EBT. Ultimately, at the end of the story, HMRC won the case, which went through many, many cases and appeals in 2017. And that, since then, every other tax avoidance scheme has been affected by HMRC winning this case. It became the case precedent that they always refer to, which was why it was so significant. Next slide. And here you go. David Beckham was caught. So Robbie Williams, Wayne Rooney, Alex Ferguson, the list goes on and on and on. We've got members of our ROS that were affected by it. We've got some footballers in our membership that were affected by this, that went bankrupt because of this. I won't say who they are to keep their names private, but I've had interactions with them, and I know that this is a problem for them, was a problem, still is a problem. Some of them, like Beckham, was able to get through it because he could afford to pay the taxes, but others couldn't. And others who'd spent the funds went bankrupt. So, you know, that might not be a problem for the average member in our organization, but it's kind of just paints the picture of, you know, there's still the promoters haven't been focused on. And there are all sorts of variations. When we haven't got time to go into them all, there's all variations on the theme. They're all called tax avoidance schemes. There's different varieties of them. None of them worked, but they were heavily promoted. And the promoters, as I say, at the moment have avoided any kind of liability, which I think is very interesting. Next slide. And it is 3.4 billion of taxes which HMRC are going after. So it's not an insignificant amount, yeah? 3.4 billion pounds of taxes which they are going to take from the British citizenship, one way or another. Whether that is through people who've got some investments that they're going to cash in, or whether their people are going to have to sell their houses, their possessions to pay it, HMRC aren't going to have any compassion. And there's plenty of examples of where HMRC have got no compassion at all. And they actually enjoy it. They actually enjoy destroying people's lives and getting the tax out of them. As I say, they have a department, which I think the prerequisite for working there is that you have to be psychopathic. It's about 300,000 as an average per guy, or per man, woman who's involved in this. Yeah, there's about, in my estimation, there's 100,000 in the UK. It could be more, and the taxes is 3.4 billion, so it's about 300,000 on average. Some people very high, some people much lower than that, but the average around 300,000. So it's not an insignificant problem. It's a very big problem. Next slide. And you can imagine that if you receive on your doormat a demand from HMRC for a very large amount that you haven't got, you can imagine what that could do to your psychology of how you feel about the world. And you know that HMRC aren't going to go away. It's not like they're the bailiffs that you turn up and you can sort of push them away for a while. HMRC have got a whole range of powers which they can bring against you. So it's a pretty dark day when that letter falls on your map. And you know that they're not going to go away very easily. And even if you try and fight them, they've got all of these case precedents now of where they've won. So in the courts, the judges are just going to say, well, that looks like this case is similar to the other cases that have already settled. So, you know, you're not going to win in the courtroom. It's highly unlikely. No matter how smart your arguments are, you're probably going to lose in the courtroom, which is why people are, you know, struggling with this badly. People like Frankie Dettori, the jockey, he had to go bankrupt because he just couldn't pay the taxes. So someone who's had a whole career in horse racing, who, you know, I think a lot of people quite liked, old Frankie Dettori, has suffered very badly and went bankrupt. Next slide. But here you go. The components of this, you've got the schemes, you've got the accountants, you've got the promoters, you've got the tax avoidance experts that wrote the opinions, and then you've got the taxpayers. Well, the only group that isn't being focused on is the promoters, the accountants who promoted these schemes, the other promoters who were very high profile, and there's a whole list of them who promoted all of these schemes. They have got away with it completely at the moment, having made, in some cases, many millions a year in commission. Have completely got away with it. I don't think that's right. I think they should be sharing in the problem. I think they should be assisting if they've got resources to do so. And I can even show them how they can finance their liabilities, which we'll talk about later. Next slide. So that's the problem, right? I think everybody on this webinar can now relate to the nature of the problem. It's not going away anytime soon. It's going to get probably worse for a lot of people. So let's have a look at the solution. The first step of the solution is to create a higher level of standing. So how do you do that? Well, you know that there is the living man, woman, and then that's the substance, and then you've got the Monopoly Board of Commerce, where all of the commerce is being played through artificial entities. So, by the way, the taxes are taxes on artificial entities, whether they're companies, whether it's the person, the citizen, the birth certificate construct. The taxes apply to the artificial construct, and where most people are in the truth and freedom community are completely going in the wrong direction, is that they're arguing things like, well, those taxes don't apply to me because I'm a living man or woman. I'm under God's law, and the birth certificate construct is not me, so therefore I don't owe the taxes. And what all of these freedom and truth community people are missing is the fact of agency. There is an agency between the living man, woman, and the birth certificate construct. So it doesn't matter what you say. I'm not the birth certificate. You know, I'm a living man. You know, the Constitution's going to save me. Whatever it is going to save me because I'm not that birth certificate construct. And the taxes don't apply to me. It's not going to work in the courts. And I can tell you that now because people have tried it and they've lost badly using any argument in the courtroom that says that they are not liable as a living man or a woman, no matter what the presentment is. And the reason why is because of agency. You see, when the birth certificate is created, which is typically a different day from the day that you were born, your mum and your dad registered this entity, the birth certificate construct, and then it became the banker. It is a banker under the Bills of Exchange Act. It is a banker because it is a person, and a person is an artificial construct, which is a banker that can issue negotiable instruments. We'll come back to this in a few slides' time. And the living man, woman, as soon as they get the social insurance, national insurance number, is now caught as the agent for the birth certificate construct. This is so foundational, so pivotal. And I wish I could get everybody out there to really get their comprehension of this. The living man, woman is the surety, the underwriter, where all the liabilities end. as the agent for the birth certificate construct. The whole of the freedom and truth community that are believing in all these ideologies, none of them work because of this, because of agency. But there is something you can do to improve the effect of agency liability. What I mean by agency liability is all the liabilities of the birth certificate construct on the monopoly board are paid by the living man woman. That's how it works. It's a trap. We've all been trapped into it without realizing the trap. It's next level genius by the cabal. But if you want to address the problem and try and solve it, then you need to separate as much as you can the birth certificate construct and the living man woman. And you can do that with the Envoy protocol. The Envoy protocol does two things. It removes the fraudulent use of the name of the birth certificate. So that's the family name, the surname on the birth certificate, because that name, no matter what people believe, it doesn't belong to you. It belongs to the crown, the cabal, because the birth certificate is registered to them. So it's their trading name. And although it doesn't remove all the liabilities just by becoming an envoy under the Envoy protocol, what it does is it sets up the second part of the Envoy protocol. It sets the living man woman up as an envoy of the Republic of Old Souls, which is a registered ministry in the United States. So the envoy becomes a minister of a 508c1a ministry that has a belief in playing monopoly as a creditor, in being peaceful, in recouping signature credit, abandoned credit. Now that is a belief system. And if you are an envoy for a ministry that has that as a belief system, now you have a religious protection in the United States, because that's where the ministry is registered. So by becoming an envoy, it does two things. It cleans up the identity fraud of using the birth certificate surname, but it also provides an envoy status, an envoy of a ministry. And as we go through this, that will become clear as to why that's important. Next slide. And if you're going to go after the promoters, just imagine that you took up a case in the United Kingdom, in the courtrooms in the United Kingdom, against some of the promoters. Is there a potential risk that the court case is going to be rigged and railroaded to protect the promoters? I say yes. I've lived through 16 years of cases being rigged and railroaded by the FCA and their friends. Many of the promoters are at that level, are going to be protected in the United Kingdom system. But these protections that they enjoy don't apply in the United States. But you can't take on a case in the United States unless you have a substance connection to the United States. So by becoming an envoy of the Republic of Old Souls, which is a United States ministry, that gives you the potential standing. I say the potential standing because there are a few other things that have to be put together, but it gives the potential standing to take the case into the United States court system, as opposed to leave in the UK, where the case might be rigged and railroaded. And if there is a UK case going on, so picture the scene, HMRC are going after a taxpayer and they've got their big guns out, and there's a court case in the United Kingdom. If there is now another case in the United States, that case, through what's called comity, international comity, can stay the case in the United Kingdom. What I mean by staying is a term in the law. It's just basically stalling it until the case in the United States is being decided. It's called stay. It just means it's stalled, really. So this strategy can delay and defer any action like bankruptcy, like being foreclosed on by the bailiffs, like HMRC getting an award, getting a follower notice, getting all kinds of aggressive things, because there is another case going on in the United States which has the power through international comity to stay the case, stall the case in the UK. Sometimes in the art of war, you don't try and win the battle until you've won another battle. Yeah? You don't take on the first battle until you've won the second one. You might stall the first battle to win the second one. Once you've won the second one, you might then be able to win the first battle, or you might have the resources to discharge the problem. Next slide. And how are you going to discharge the problem? So if we've established, which I hope we have, that we can stall the case in the UK by taking up a case in the United States and through comity stalling the United Kingdom case, if you're doing this defensively, but you could also be doing it offensively of taking on the promoters for their liabilities of promoting schemes that didn't work. And, you know, basically that is a misfeasance because they promoted something where they probably knew it didn't work. There was a significant amount of information about these schemes not working, and yet they still promoted them. So they haven't got a very good defense, right? Now, if you then look at, well, how could you discharge the ultimate liability, even if you lost the case in the United States and lost the case in the United Kingdom, if that was what was going on, how could you discharge it? Well, you'd set up a private treasury, which is the Asset Fortress Protocol, which is an international trust that A, can take the case on, because the trust takes the case on, not the birth certificate construct. You set up a trust, which is a nominee fiduciary, and that fiduciary entity, the Asset Fortress, takes the case on as the plaintiff, as the claimant in the United States. But it also becomes the private treasury to receive signature credit recoupment that can be sufficient to discharge the liabilities if the case loses in the United States and if the UK case loses, which it probably will. But you've stalled the UK case for such, for an amount of time that it's going to enable the discharge remedy to be made possible through the recoupment of abandoned signature credit into the Asset Fortress Protocol as a private treasury that not only has got the case against the promoters in it, and it's also got the receipt of the signature credit recoupment in it as well. So it becomes the treasury for two things. One is the case, the value of the damages claim, and the other is the signature credit recoupment. Next slide. And this really is the ultimate remedy, as I've been talking about now for a long time, and still people who come on the webinars I don't think are really fully comprehending this. I've done quite a few interviews on this on Ross Media. I've written documents. I've been head-to-head with Dan Needle on this, by the way. He stopped arguing technically with me anymore because he knows that I've won that technical argument with him. And he was allegedly one of the UK's most, highest prestigious tax experts. I've sent Dan Needle documents. I've sent him proof of signature credit, abandoned signature credit, how it works, why it works, the proof of it working. he can't argue about it anymore because I've taken away every single one of his arguments. If you go, when we get to the handouts, you'll see the documentary proof, the technical proof, the justifications for the Clifford Protocol, which is how you can recoup your abandoned signature credit from the age of 18 onwards. So I've done this presentation of how it works many, many times, but if you haven't seen it, I'll give you the high level. There is no money of substance. There is only ledgers. There is only the creation of what's called negotiable instruments. So when you sign a loan agreement, when you make a bank payment, when some other entity makes a deduction from your wages, that is the issuance of a negotiable instrument. A negotiable instrument is a promise to pay in the future. There is no way of paying anything on the Monopoly Board of Commerce because there is no money of substance. There is only ledgers of assets and liabilities. The banks are operating as the recipient of deposits of your negotiable instruments. So when you transfer funds to a bank account, or somebody transfers those funds into a bank account, those receipts into that bank account are deposits. They are deposits of negotiable instruments. There is no transfer of any money. There is only the credit that is inherent in the negotiable instrument, which the bankers call deposits. But people who are unaware of how the system works think that a deposit is a transfer of money from one account to another account. There is no such transfer taking place. There is only the deposit of a negotiable instrument, which is newly created from a signature. So the living man, woman is the energy that is being transferred through the body corporate, the birth certificate entity that is operating as a banker under the Bills of Exchange Act of 1882 to issue a new negotiable instrument. That negotiable instrument is a promise to pay in the future. It's a deposit of an asset. The bankers take the asset in as a deposit. It becomes their asset. They match it with a liability on the other side of their balance sheet. That liability then gets sold. The liability, which is a security, is then sold to investment banks in New York. The investment banks in New York get to use those securities for something called hypothecation, which is multiplication of the value of the security. They can multiply its value up many, many times. But in order to use those securities, they have to pay taxes to the United States Treasury. So the investment banks that are using the energy of the signature have to pay taxes to the United States Treasury. The taxes that they pay are they are defined in a tax module called the 945 tax module. So every single year, the investment banks are paying taxes to the United States Treasury under their 945 tax module. Those taxes actually belong to the creator of the signature. So if you've made a bank payment, signed a mortgage contract, signed a loan contract, had a deduction taken from your wages, your PAYE, that is a signature energy. That signature, the taxes on that signature, which creates the credit, is at the moment, unless you have already been doing this for some time, which is unlikely, the taxes that the investment banks are paying on your energy are being retained by the United States Treasury. Those taxes belong to you, not the United States Treasury. So in order to collect those taxes, those tax recoupments, you set up a nominee structure. So this is where the 98 series grantor trust, as a nominee for you, the living man, woman, you set up a nominee structure the nominee structure, which is a trust, a 98 series grantor trust, files tax returns to the United States Treasury to correct the record and redirect the taxes which they are keeping and pay them to the trust, the grantor trust. The banks don't suffer from, they don't pay any more tax. You're not recouping from the banks. You are recouping the taxes which the Treasury at the moment is keeping. You are redirecting those taxes to your trust. Because I've had a lot of questions about this. Won't it make the banks go bankrupt, Ian? You're recouping from the banks, they're all going to go bankrupt. No, it makes absolutely no difference to the banks. They don't pay any more taxes. The taxes that they've already paid are redirected to your trust. Then the next question I've had is, well, surely if everybody does this, Ian, the United States Treasury is going to go bankrupt, isn't it? Because they're not going to be able to keep those taxes. I wrote a whole paper on this, which is, I think, in our handouts, right? The United States Treasury is never going to go bankrupt because it can create credit, as the United States can, as every government can, by printing money. If you could, let's call it money. So it's called ex nihilo credit creation, as confirmed by the Bank of England in Money in the Modern Economy, as confirmed by Professor Richard Werner in his papers, many papers that he's written. This is how money springs into existence. Ex nihilo, out of nothing. That's what ex nihilo means. The signature creates the credit. That signature is a transference of energy from the living man woman who's not on the monopoly board, can never go on the monopoly board of commerce, through the birth certificate construct, which is on the monopoly board, as a banker, issuing promises to pay. The investment banks take those promises, use them and multiply them up. The gods of the universe, with their billions and billions and billions of profits every single year, as reported in my document, in my research, then pay taxes to the United States Treasury because they're using your energy. And they pay taxes to the United States Treasury for using your energy. And all you're doing with ex nihilo credit creation is expanding the money supply. The world debt gets bigger and bigger and bigger, and the amount of taxes gets more and more, but those taxes belong to the signature, the entity that created the signature, which is why I call it signature credit recoupment. I prove it from A through Z in my research papers. Dan Needle said it was tax fraud. I challenged him to prove where it's tax fraud. He can't do it. We've gone backwards and forwards for 6 weeks. He now doesn't argue about technical matters. He now says he doesn't accept that the proof of our 600 million of proof that we had last year is real, even though I've given him the proof. I mean, the man just completely lacks honor and integrity, I'm afraid. But there again, he's working for the establishment, so he's not likely to have very much honor and integrity, is he? I hope you're watching, Dan, because I'm going to really enjoy it when we get head to head, man. Anyway, let's move it on to the next slide. And this signature credit is being put on the Monopoly Board of Commerce since the age of 18. Why? Because that's when you got your social insurance number for the artificial birth certificate construct, which has been issuing all of these negotiable instruments from the age of 18, which is just transferring energy onto the Monopoly Board. That's your modern slavery system. All that energy that you've put on the Monopoly Board through your labor is now going round and round the board as debt. And all that debt is generating taxes, which the United States Treasury is collecting, and those taxes belong to you. And you see, those that want to say this is tax fraud is because they don't understand how it works. It's all explained in IRS publication 1212 if you understand how to read documents, which obviously Dan Needle doesn't. You see, it says very clearly in IRS publication 1212, basically, if you interpret what the words are actually meaning, that the all of this energy is future. They're valuing it on its future value, which is why it's original issue discount, and they're discounting it back to a value today, which is standard practice in securitization. And then there's an amount of tax to pay today. There's an amount of tax to pay next year, the year after, the year after, the year after, on the energy that is being transferred onto the monopoly board from your age 18. This is generating an annual tax, a tax amount that the Treasury is collecting every year from the nominee banks, and all that tax belongs to you. So if you go back to the age of 18 and estimate how much energy you've put on the monopoly board through bank payments, mortgages, loans, credit cards, wages, the deduction of tax on wages, utility bills, etc., that can be recouped in the last 3 tax years. You can file tax returns. Not you can, the grantor trust can file tax returns. By the way, it's not Ian that files the tax returns. It is a professional tax professional with a license that files the tax returns. It's not Ian. I'm not pushing buttons filing tax returns. I do the technical research. The entity that's filing the tax returns is an authorized IRS tax preparer that wouldn't do this unless it was completely lawful. And you can go back to the age of 18. So imagine how much signature credit you've put on the monopoly board from the age of 18. It's quite substantial, yeah? But I want to say this now because we're going to be talking a lot about this going forward. Not everybody in the world can do this. There's only a certain amount of tax paid to the United States Treasury every year. In the last 3 years, it averages $60 billion. That's the taxes that the IRS, United States Treasury, collecting every year on average in the last 3 years. So that's the amount of recoupment that our members can draw down upon, around 60 billion. So that is, in my estimation, no more than 100,000 people can do this. So there is a limit to this. So if you want to do it, and you want to keep on doing it year after year, because you can spend and recoup, then you need to start thinking about filling up one of those slots of the 100,000, because there will be, otherwise it will be saturated and we won't be able to do this because there won't be enough taxes to recoup. Next slide. And it's all about as it says in IRS publication 1212, it's talking about the nominees. So this is all about nominee filings. The living man woman cannot file a tax return. They're not on the monopoly board. The birth certificate construct cannot file a tax return because it itself is registered to the cabal as a taxpayer. You can only establish a new nominee fiduciary structure to file the tax return as what's called the holder in due course. Straight out of IRS publication 1212. And what the IRS does is it looks at whether it can match the signature, the credit that is being transferred onto the monopoly board by the signature into the bank, the originating bank that sold the securities to the investment banks. The IRS system is very, very smart. It can track the signature created energy, negotiable instruments through the whole journey. It knows whether that signature credit belongs to the, ultimately to the signature provider, which is the living man woman. It's got a algorithmic system that it looks at all of these things and triangulates them and researches them all. Which is why sometimes people do not get their recoupments, because there's not enough taxes paid to equal to the recoupments that they're trying to recoup. And that's why the IRS runs their 8-10 algorithm. It's all in my paper how it works. So you see, if you're going to recoup abandoned credit, what you're actually doing is recouping taxes. The taxes are taxes on your energy. They belong to you because it's your energy, but you can't recoup more than the nominees, the banks, the investment banks have paid in. It's all in my paper. Next slide. So that's the ceiling. You basically got a, depending on how much taxes is being paid every year, that's going to constrain how many people can join this program. And you can't recoup more than has been received by the United States Treasury. And there will be a limit to it, and we may adjust the limit of how much people can recoup after a while, because we may want to get more people in doing it. So if you want to do it for the last 3 years before there's too many constraints on how much you can recoup every year, there's a strong reason to do it, to get on and do it, or get others to get on and do it, to bring other people in, refer them and get them to start doing it. Next slide. Now you see the asset fortress, its purpose is to create an international trust, which is a treasury. It will give you relief from digital ID. You can put the case into it, which is the case against the promoters. You can receive the recoupments in it. You can spend and recoup from that treasury every year. So it becomes just like people who have a treasury, it becomes your treasury, but it's not the birth certificate construct. That's separate from this. This is an international trust as a private treasury to receive the recoupment of the signature credit, to spend it and recoup it, spend it and recoup it, and also receive the damages, the value of the damages claim if there is going to be a claim against the promoter, as I was explaining earlier on. Spend and recoupment cycles. Just imagine, I did an interview yesterday all about the freedom plan, of why we're doing this. So just in case you don't know, why are we doing this? It's not to make money. There is no money of substance. And if I want to make money, I'll say it again for the 1,000th time. If I want to make money, I can trade the markets. I can recoup my own credit, my own signature credit. I'm probably, arguably, the most qualified man in the world about how the signature credit recoupment works, right? Why, if I wanted to make money by ripping everybody off and defrauding everybody, these idiots that keep saying that on social media and on blogs and websites, if I know how to do signature credit recoupment and I know how to trade the markets, why would I need to resort to fraud? Why would I need to spend 7 days a week dreaming up fraud schemes? The people who say this have got an ulterior motive to say it. They're trying to protect the system by saying this malicious bullshit. So if you imagine that you can spend and recoup year on year, and if you are concerned about AI, which I am very concerned about AI is going to take, arguably, and there are different reports, but some people are predicting that 50 to 60% of the jobs that are currently, where people are currently receiving a remuneration for doing a job of some nature, is going to be replaced by AI. It's not just me saying it, it's nearly every single CEO of every single Fortune 500 company is saying that they will be cutting their workforce because AI can do the work of the majority of their workforce. So look into the future about what that could do for you. What effect could that have on you? You could be recouping your abandoned credit, spending it, recouping it through your private treasury, as opposed to losing your job, maybe even losing your business, because AI is doing everything that your business is doing or everything that you're currently doing in your job. Next slide. So the solution to this problem is there are two parts to it. There is the stalling effect and possibly the claim against the promoters winning. And then there is the recoupment of the abandoned credit through the private treasury. And obviously the recoupment of abandoned credit and the private treasury isn't just available for those who've got a tax avoidance problem. It's available to anybody who wants to do this at the moment. The case being transferred to the United States is a major shift of jurisdiction. So because many of the cases in the UK are rigged, by moving the case to the United States as an envoy of the Republic of Old Souls, it completely shifts the dynamic of the case. It gives you, if you're going to do this, it gives you the solution in terms of the discharge of the taxes, but it also provides the stall that you need to get all these ducks in a row to get the recoupment through. But you might also win the case against the promoter, who, by the way, many of them have got insurance. So you could be substantially better off. Well, if you do just by the recoupments of the signature credit, you're going to be substantially better off. But you might even win the case. You might be able to discharge HMRC through the signature credit recoupment, and you might win the case against the promoters. The whole process that I've just described is 100% in accordance with the IRS manual, their tax manual, as all in my documents at the end when you get the handouts. The moving the case from the UK to the US is only possible if you've got the standing to do it, which is the envoy protocol. That again is called International Comity. You can look it up if you want. You can see it. If you go on our Telegram channel, I've just published a report on the Telegram channel about the case against Dan Needle and how I'm shifting it, moving it into USA jurisdictions. If you read that report, which isn't in our handouts, because I only finished writing it 10 minutes before the webinar, it's in the Telegram channel. Next slide. So you've got the improvement of the standing and becoming an envoy. That's very significant if you want to take cases into the United States. You've got the art of legal warfare, which is to go after the promoters. I call it the equalizer redress protocol. You can stay HMRC because there is a case going on in the United States, which means that you can stall the bill from HMRC whilst you are recouping the signature credit and using your private treasury, which is the asset fortress, to ultimately discharge the taxes, which guess what? The discharge of the taxes can then be recouped because it is another issuance of signature credit to discharge the taxes, which you then recoup. So the tax bill doesn't have any costs attached to it whatsoever. And you get the additional signature credit recoupment as well. And if you are running a business, you can do what's called the commerce protocol, where you can convert your business as a commercial entity into a ministry that has a cause, and then there are no taxes to pay, no reporting, and you can use the business expenditure as the negotiable instrument, signature energy, to spend and recoup and increase the amount of the value of the recoupments that are coming into the asset fortress, which is the private treasury. That's how you play Monopoly at the advanced level. Next slide.
Hello, Wow. Well, that was a complete and utter eye-opener, and I'm sure people who are watching on this have learned so much. And I think there were some clear messages as well throughout that presentation. And I think one of them, what I've made a note of is, is there demand for this? If anybody knows who are going through these issues, please inform them about today's presentation. This is absolutely phenomenal. And some of the key points you went through as well. I just want to go back. I hope you don't mind, Ian. These clear messages you mentioned here as well. And also another clear message that came across is, about not enough taxes to recoup. If I remember rightly, there is duty limited taxes collected in the 945 tax module, and we do anticipate, there is going to be overwhelming demands. So it's so vital and important that if anybody's going through this, to refer. But we're going to discuss that in a moment. But let's get to the top 7 questions. Are you ready?
Let's do it.
Okay, HMRC enforcement. If I'm currently facing a 14-day eviction notice or an accelerated payment notice from HMRC, how exactly does the transatlantic pincer and the SDNY filing legally stop a UK court from proceeding with enforcement? I know you've touched upon that, but it's good as a reminder if you can go through that again, please.
Yeah, so SDNY, that's actually the New York court, because many of these cases could be taken up in New York. And what's going on here is that you are basically taking a case to the US, and the case in the US is trumping, forgive the pun, but it is out trumping the case in the UK. And because of international comity, the case in the UK has to be stayed, meaning delayed, stalled, because of the case in the US. It doesn't have to be New York. It could be Wyoming. It could be Texas. It could be somewhere else. It depends on the circumstances. There are many different court venues in the United States, depending on the type of claim that's being made, right? There are a range of types of claims as well. I haven't gone into them all. I wanted to establish generically whether there was any interest in this, and if there is, then I'll write technical papers on exactly what the claim is about, how it's done, why it has a high probability of winning. I'll write that research paper. But until we've got interest in this, there's no point me spending hours writing research papers unless there are people interested in reading them.
Absolutely, yeah. Okay, thank you so much for that. So question number 2, professional liability. Since the promoters included advice shields in their contracts telling us to seek independent counsel, what is specific technical argument ecclesial law uses to overcome this and hold them liable for professional negligence in a US court?
Well, that's a really good question, and you see, if you are basically taking a tax avoidance scheme from a promoter, you've had meetings with them, you've been on the end of their presentations, and it's all looking very attractive, and you're going to go ahead and do these tax avoidance scheme or schemes because you might have more than one. And the promoter's got a document that they push across the table to you and say, I'm not advising you to do this. Yeah. And there's a disclaimer on my document here that says that I'm not giving you any tax advice. Yeah. And if they think that that is going to get them out of their liabilities, which in the UK it might do. I'm going to say this slowly, right?
Please.
In the UK, it might get them out of their liabilities. But these liabilities are different if you are an envoy of a ministry. Okay, so why is that? Because if you become an envoy of the ministry, the Republic of Old Souls, you have a belief in the mission of the ministry, and the fact that the taxes that HMRC want to collect from the birth certificate construct, which you are underwriting as the living man or woman, has now become an envoy of a ministry. The tax promoter, who's got this nice disclaimer that says, well, you know, I didn't advise you to do these schemes. You took it on your own. You know, it was your decision. I'm out of here. I've got no liability. Well, that might be true in the United Kingdom, and in a courtroom, they might win with that defense. But not in the United States, when the effect of what they did infringes on the minister of a ministry that believes in the monopoly board analogy, and what I've described, and all of the cause of the ministry, etc., etc. Because the taxes that HMRC are now demanding are affecting the lifestyle under Article 1 of the United States Constitution, affecting the freedoms and the lifestyle of the envoy. And the promoter is now become vicariously liable with anyone else that promoted the scheme who also says that they didn't give advice. So what you've done here, if you're going to do this, is you've defeated the number one defense that the promoters have got, which is why nobody's going after them, by the way. And you've shifted the jurisdiction, and you've changed the argument. You've taken it from a game of drafts to a game of chess. That is what you're doing. That's why I'm saying it slowly, because it's a lot to take on, right? That's why the promoters are sitting there thinking that they are immune from any lawsuits. Don't worry about us. We're never going to be sued in the UK. Not the case in the USA for envoys of a ministry.
Thank you for that. Now, don't worry, guys. As I've mentioned earlier in this presentation, this is being recorded. This will be uploaded on the platform so you can recap what Ian has been saying today, including that answer to number 2. Question number 3, recoupment eligibility. You mentioned recoupment since the age of majority. Does this mean I can reclaim the signature energy from a mortgage that has already been fully paid off, or a business loan from 20 years ago? And is there a limit to how far back we can go?
Well, you can go back to when you got the social insurance, national insurance number, because the signature credit that's why, by the way, there is a social insurance account. The national insurance, the social insurance number, whatever it's called in the country that you're in, it's all the same. Basically, the principle is the same. That is the license for the banker to be able to issue the negotiable instruments. The social insurance number, national insurance number. So anything that has been issued since then can be recouped because it's signature energy that's been put on the monopoly board. That is world debt. The signature energy is world debt. It goes up and up and up and up. Just go onto the world debt clock and you'll see. Type in world debt clock in your internet search bar and see it going up and up and up and up. That is signature energy. And it's all been put on that monopoly board since everybody got a social insurance number.
Thank you for that. Question number 4. The 98 Series Trust. How does the IRS 810 code algorithm distinguish between frivolous claim made by a debtor and a lawful filing made by a 98 Series International Grantor Trust? And what prevents the IRS from freezing these funds.
And that's, you know, that this is the level of technical argument that I've been using with Dan Needle, because he doesn't understand these things, right? Simon Goldberg, we're doing a webinar next Saturday about the fact that Simon Goldberg has been doing these tax filings for his members of Empower the People, putting them in peril and immediate danger, because Simon Goldberg, who equally doesn't understand how this works, has been filing tax returns for the body corporate, the birth certificate construct, which itself is a taxpayer. A taxpayer cannot recoup signature credit taxes. It can't. It is prohibited by the IRS. This is why people have gone to jail who've tried to do it. There's many cases of people going to jail because they filed the tax returns from the birth certificate construct, the person, the taxpayer, the citizen, to the IRS, because they found some information somewhere that said that you can recoup abandoned credit through a 1099 OID, but they didn't realize that the standing of the tax filer has to be a nominee that is not a taxpayer. So what is that? That is a international grantor trust. So you create the grantor trust as a nominee, a fiduciary for the living man, woman that is the beneficiary of the trust. The beneficiary of the trust is not on the monopoly board, is not a taxpayer. The grantor trust is not a taxpayer. It is a nominee. And as a nominee, it can lawfully take the position of what's called the holder in due course. So if you read IRS publication or go and look up what holder in due course means, it means the nominee for the signature energy creator, which is the living man, woman, who's not on the monopoly board. So when the grantor trust, which is the nominee, files the tax returns through an electronic filing licensed tax specialist, the IRS receives that 1099 OID filing, not from the taxpayer, from the nominee, which is now operating as the holder in due course of the credit. The rightful conduit to return the signature energy to the living man, woman, who's not on the monopoly board, but has put a piece on the monopoly board, which is the grantor trust, to file the tax returns to get their signature credit taxes recouped back to the trust as their nominee that's doing it as the holder in due course. So the comparison is stark, right? You can either send a tax return in, which is what Simon Goldberg does, as a paper return from the taxpayer, the birth certificate citizen. The IRS receives it. Sometimes they make a mistake and issue a check, but most of the time it becomes a frivolous filing penalty. It ends up as a frivolous filing penalty because a taxpayer cannot file for a recoupment of taxes. Not in this system. Only a nominee can recoup a signature credit taxes. And the body corporate person, the citizen, is not a nominee. Well, it actually is a nominee. It's a nominee for the cabal because it's theirs. Because they set it up. They created it. So the taxes belong to them, yeah? I hope this is starting to make some sense for a few people because it's so fundamental. You see, you can't recoup abandoned credit as taxes unless you've got the right standing to do so. So the grantor trust gives you the standing to recoup the taxes, as it's not the body corporate birth certificate construct, because that belongs to the cabal. The taxes belong to them. If you file through the birth certificate construct, the citizen, the person, if you do get a check, they can take the check back from you because it doesn't belong to you. And if they don't give you a check, they're going to issue a frivolous filing penalty. And if they get really pissed off about it, they're going to put the people who've done the filings in jail, as they have done just not long ago for a guy in Canada, which I'm going to cover on next week's webinar. So it's all about the standing. The grantor of trust becomes the nominee, the holder in due course. The tax filings are done through a professional tax filing license holder. The IRS algorithm knows that it's all being done completely in accordance with the IRS tax codes, and it's all completely lawful, which is why Dan Needle's gone silent. And now, not only has he gone silent, he's blocked my email accounts because he can't win the argument.
There you go. Question number, and just to actually say that answer is so important, as you said. So again, guys, this is recorded, be on the platform, go through, especially these questions, you know, the answers that Ian is delivering, very important. And again, it's all about learning and education. So question number 5. Capacity versus identity. If I renounce my role as liable surety to become an envoy and general executor, how does that affect my daily life in the UK? For instance, can I still hold a passport, use a driving license, or operate a standard UK bank account?
Yeah, the driving license, the passport, the bank card, everything is in the name of the birth certificate construct, the person, the citizen. Nothing changes. That entity still uses all of those things. But you see, that entity is actually a decedent estate. On many webinars that I've presented, I explain, and you can go and look this up, that the registration of the birth certificate is actually the registration of the placenta, and it dies. The placenta dies. The birth certificate construct is then a decedent estate. It's a dead estate that's operating in probate, which is under trust law in probate. So if you know about probate is trusts. The birth certificate entity is a trust. And in a trust, you have a general executor. Like if somebody dies, somebody becomes the executor of the will, yeah? So in a decedent estate, the general executor is the executor of the estate, the decedent estate. Well, that executor is known as, is operating through an office, right? So an office is created, not a Regis office with a desk and a phone. An office is an artificial construct. The office of the Prime Minister, yeah? Is that an actual office? Can you go and sit in it? No, it's just an artificial construct called an office. So an office is created that sits above the decedent estate of the citizen, the person, and the living man, woman occupies that office as the general executor, but the person, the citizen, doesn't go away. It still stays there with its passport, bank card, driving license, all the other things it's got. No change. Just you've rearranged the pieces and taken a superior position to be able to have more influence over it and to become an envoy of the Republic of Old Souls.
Thank you for that. Question 6, the asset fortress. If the funds in the asset fortress are off board from the corporate state system, how do I actually move those recouped credits into the local economy to pay for my mortgage, taxes, or daily business expenses?
Right, so let's talk about employee cards, shall we? I think everybody will know that if you work for a company, they can give you an expenses card, yeah?
Yeah.
You can use that expenses card to buy things, yeah? It's using common language. Yeah. So imagine that you've got an asset fortress protocol trust with a bank account, and that bank account has a card. So the Ian Clifford Trust bank card. Just like the employer giving you a card to use to buy things, expenses, yeah?
Yeah.
It's the same thing. Your asset fortress has a bank account. It has a card from the bank account, which you can use just like you would use the employer's expenses card. And yet there's no limit on what you can buy with this card from the asset fortress. Your employer might say, hey, I don't want you buying fur coats and Lamborghinis on this card. You can only buy fuel or food or hotel bills, yeah? But in your asset fortress protocol, you control that. You can spend your funds in that account on anything you want and then recoup them, because the signature energy is still being used to create the negotiable instruments, but now from the asset fortress protocol to spend and recoup. New instruments created, recoup. Instruments created through the signature, recoup.
Thank you for that. Last question, number 7, commerce to calls. For those of us running active VAT registered businesses, what are the practical steps to convert a standard limited company into the commerce protocol? And how do we handle existing employees and supply chain contracts during that transition?
Yeah, that's a really good question. And I had this come up a couple of weeks ago. So this is talking about the commerce protocol of converting a business into a cause, into a ministry, right? Now, you can create a ministry. That's a 508c1a ministry. It's called the commerce protocol. And instead of invoicing people or taking in fees, or however you take in your cash flows that come in for the products or services, in the ideal world, you would not take fees or take in invoices, get invoices issued and paid on, right? What you would do is you would get donations, okay? And the donation is not a taxable event. The churches don't pay taxes, by the way. When you make a donation to a church, the church doesn't fill in a tax return and pay taxes. Churches, ministries are exempt from tax. So you create the business into a ministry. The ministry's mission is whatever the benefits of the products or services that the organization is providing. That becomes the belief of the customers of the ministry. So you've gone from commerce to cause. You've gone from tax to tax exempt. But some people who've got international organizations that want to reclaim, or have they have a supply that they want to recover the VAT, the value added tax on, they say, well, if I take all my cash flows coming in as donations, I can't then reclaim the VAT, the value added tax, which is a problem. And I might need the value added tax or some kind of license to run this organization, right? So here's the solution. And the best way to explain this is with an example. So let's imagine that I was running a business, right? And it makes £1 million a year in cash flows coming in, right? 1 million coming in. And I've got expenses of 750,000. So I'm making 250,000 clear, yeah? Profit. Everybody understand that? It's pretty easy, yeah? Now, let's suppose that 1 million of cash flows coming in, I am invoicing out to my customers and charging them VAT, value added tax. So I'm inflating my base invoice cost by whatever the rate of VAT is now, 20%, let's just say it's 20%. Right? I don't know what it is today because it keeps changing. So I'm increasing the amount of my invoices to collect taxes, value added tax, allegedly. What a load of bullshit that is, but that's what they call it, right? So now I'm going to have to fill in a VAT return and send the tax office value added taxes, yeah? And now, and what I'm also going to be doing is when I buy stuff from suppliers who charge me VAT, I can set that off against the invoices and the value added tax that I've collected on, yeah? So that's basically how it works, right? And let's imagine that my business needs a license. For some reason, it needs a license to do whatever it's doing, right? Might be an export license, might be some other kind of license, right? But I really want to do the commerce protocol because I want to create this this environment where I can reduce my taxes to zero, and I can then spend and recoup all the business revenues in the asset fortress, which is the private treasury for the ministry. How am I going to do that? And I'll explain how you do it. So the business, which has got a license, which is collecting and paying VAT, stays there. But instead of making 750,000 in profit, it makes a donation to the Commerce Protocol Ministry. And guess what? A donation is a tax relievable item. If I made £750,000 donation to a ministry, there would be no taxes to pay on that, and I can reduce the amount of the income that's coming in to the business by that amount. So there's no taxes for the company to pay that's got the VAT and the license, and all of the funds are now in the ministry as a donation. The ministry is a separate entity from the company in the UK or in Australia, Canada, New Zealand, United States. And the ministry is then going to take that donation. It's going to make a grant to the asset fortress. It's going to transfer the funds to the asset fortress, which is an international trust. And the international trust is going to pay all the other expenses, overheads, and then recoup them because it's signature credit. Abandoned signature credit. So that's how you do it.
Lovely. Well, thank you for that answer there. So what we'll do now, Ian, go on to the next slide.
So if you want to know more about what we've talked about today, if you want to know more about the protocols, if you've got questions, you want to have a consultation with one of our specialists, you basically click this link and it opens up a calendar and there's 4 consultants available for you. You'll have a pre-assigned consultant, and if they're not available in the times that you've got available to you and the days, then you can pick somebody else. And I think you're going to show that, aren't you?
Yeah, so I've already clicked on the link. And by the way, everyone today who's attended on this live webinar, I will be sending all the links, including this one. So when you click on the link, it will take you to a page. You just submit the email address that we have on the platform, and it takes you to this part here. So on this test account, as you can see, we have Paul Packer. So you just click on the link there and go through all the details. Now, if there's a particular time that you're available, but Paul isn't because he's already booked up doing one-to-ones, then of course, as you can see here, this link, it says can't find a suitable appointment. Click here to book an appointment with an alternative consultant. So just click on there. And as you can see, we've got everybody else on here who'll be able to answer any questions that you may have as well. So that's how it's all done. Very, very simple. And now to the next slide with regards to the additional links, which I actually mentioned at the beginning of this presentation.
Yeah, so you've got all the protocols, the main ones, the sort of foundational ones available on that first link, lv3. That's the link for the platform that you just looked at. But on there, you've also got videos and descriptions of the foundational protocols. If you want to look at and explain a video of this concept, what I've explained and outlined today, there is an explainer video. You've got the interviews. So if you're interested in hearing me answer all the questions that have been submitted on this webinar and previous webinars, then on Ross Media, Andy Benson asked me, I've done, we did 50 questions on the abandoned credit 2 weeks ago. Last week we did questions, I think there was a 40 or 50 questions on the council tax. So we go through it. Every single question that you guys are asking, I am answering on an interview where Andy's asking it for you. So, no more is it just we haven't got time to go through all the questions on the webinar. We've separated it. I answer all the questions on the interview. You've got the Telegram channel where you've got in Ecclesia Law. This is where I write all my research papers. You can go to the website as well, Ecclesia Law, where all these research papers are there. There's about 50 research papers. If you like research and you want to get into my head about how I see the world and all my research I've done on all different subjects, and if you want to challenge me on it, then my door is wide open, because I'll do a moderated debate about any subject I've written about on the Ross Media platform. I don't care who you are. If you can be anybody who's got a view, who's got an alternative, way of looking at something. It doesn't matter to me who you are. Come on and have a debate. But nobody's ever done it, by the way. But my door is open for it. Then you've got various other platforms on Telegram and things. And then I think you want to talk about the Advocate Telegram group, don't you, Sims?
Well, I was going to say, could we leave that, because we've got some slides coming up, but here on this Telegram group, I will say I do actually update our advocates first. So any news that I want to get, make sure you get that message first, I actually put in that Telegram group. Now, of course, you will get emails from me as well. But if it's speed and I need to let you guys know immediately, that's where I deliver that first. So advocates who are on there, if you're not on that Telegram group, I've sent you reminders. Get on there, because I do a lot of updates, and we've seen this advocate Telegram group grow so much in the last few weeks, because they all know that's where they get that information first, including next week's webinar, because you want to register for that, right? Well, guess who's going to be putting that in the Telegram group very shortly. So if you want to register, make sure you're on that Telegram group. To the next slide now, Ian.
Yeah, so, I've decided in the last few months that what we're going to do is really push a lot of this content out, the interviews, the webinars, out onto social media. For many years, we've done the webinars, and they were only available if you were within our platform, our private platform. So that really wasn't getting enough exposure, because that's limited to people who logged in the platform. So what we're doing now is we're pushing every interview, every webinar out onto via the social media links that are listed here, so that a much wider audience can experience what I'm talking about and see if they resonate with it and whether they like it. And I think this is going to make a big difference to those that are becoming aware of, even if it's just signature credit. I mean, 100,000 people can do it, in my estimation. I don't know how long that's going to take for us to recruit 100,000. Probably not very long. once people start to receive the recoupments in their asset fortress, it probably isn't going to take very long to get to that kind of a number. Who wouldn't want to do that when their friend's just getting, all of that signature credit recoup for them? So, but before we get to that point, I want to get the message out, even if it's just that one message. Everybody, I think, should know about it. Whether they do anything about it is up to them. But we already have a lot of people doing it, and I want to get more. So.
Cool. Okay, thank you for that. Handouts. These are the handouts that are going to be available on the platform. So, I encourage everybody, always recap on the webinars. All the recording will be there in the next few days. So our marketing team will upload that. And of course, with the recording will be these handouts as well. Ian, is there anything you'd like to add with regards to that slide? I think I've sort of said it all, really, but this is great information. You put all the research you've done, isn't it?
Yeah, the paper that I wrote about a week ago, I think it was, Will Abandon Credit Recoupment Bankrupt the US Treasury? If you really want to understand this subject, read that paper. If you don't want to know about it, it's okay. But if you really want to deeply understand how this works from A through Z, it's in that paper.
Okay. Advocate side of things. Do you want to discuss this, Ian? Because I'm so shy. Or shall I?
To me, this subject, is very simple, right? If you want to spread the word and get people to come to these webinars and expose them to the information, they don't have to do anything with it, but they can come to webinars because you're going to share your webinar link that you get as an advocate, right? Yeah. That's all you need to do is share the link to the webinars to people or through social media. They come on the webinars. If they resonate with the information that we're delivering, they become a member. You get paid a passive income. And you don't have to know anything about the subject or do anything other than share a link to our webinars. That's it. This couldn't be easier. It couldn't be more easy than that.
No, absolutely. And also, I do weekly training. I go through everything about the platform, how the advocate side of things actually work, also about an advocate originator. We go through, what campaigns you want to do, what materials are absolutely available to you as well. So there's loads of things I actually cover on that webinar to really get you started. Also, we are going to be setting up an additional Telegram group for advocates, so you can actually download templates, wording, images, videos that you can actually share on your social media. Although saying that they're changing the terminology of social media more like interactive media. If you're already interactive with your group as well, this is a superb opportunity to share. And if you recall what Ian has said as well, one, do you know anybody who's been going through this type of scheme who are suffering at the moment? Do you think they would be interested? Well, then let them know about today's presentation. See, I'm sure it may resonate because, as Ian said, we want to see what level of interest there is. And if there's huge interest, then he's going to take the next step as well. And of course, also, sorry, Ian, go on, you was going to say.
Yeah, I can say that if you get people coming to our webinars, whether they buy anything, do anything, it doesn't matter. You get a credit on your referral program, right? So if you want to do other protocols with us going forward that you haven't already enrolled in, you're going to get a webinar credit system, right? So you get credited with people that come on the webinar. That earns you credits, which you can set off against your protocol, let's just say costs, because it's usual language. So if you want to do some more protocols but haven't got the budget to do it, get people to come to the webinar, and that reduces the value of the cost of the protocols that you want to do for yourself.
Yeah, absolutely. We do actually have a slide coming up, so we've got some good examples there as well, but that's a good recap and a good reminder as well. So we mentioned about the demand, and also as Ian mentioned about, limited to, you've estimated, wasn't it, around 100,000 individuals doing this. So, again, spread that message, and all they need to do is just, as Ian mentioned, attend a webinar. They've got access to the platform as well, so they can review all the documentation and plus past webinars as well. So, and of course, on the advocate side, there is a remuneration. So here is an example of an advocate. If, for example, if you look at the top one, if they just introduce one member, it could be a family member, could be a friend, or could be someone part of their network, say business network, property network, for example. So this just gives you an idea. If that one member was doing an annual credit recruitment of $250,000, there is a remuneration at the front end when the referral makes a donation fee. And of course, here you can see the back end of what your remuneration will be. Now, imagine that one member is going to recoup year in, year out. You imagine that passive income that you will be receiving. And here we have what a 5-year plan looks like. But now, just imagine if you made 5 referrals or 10 referrals, etc., and so on and so on. So you can see what the potential earnings of that is. Is there anything you want to add to that, Ian? Because I'm just mindful of the time at the moment, and I'm trying to I will, of course, explain this all on my weekly webinar, of course, but I just want to give people, just give them an idea as such.
The problem with most network marketing models, in my opinion, is that they are multi-levels. We don't do multi-level. We just have 2 levels. And the products or services are, in many, many cases, far too expensive and not best in class. We are best in class. There is no other organization anywhere in the world that does what we do. So this is best in class. We're not going anywhere. And the amount of earnings that you can receive are off the chart compared to other network marketing or franchise or whatever it is that's out there, that people are paying huge amounts up front to get a franchise, right?
Yeah.
Because they want to get an income stream out of a franchise. You could earn more out of this without having to pay anything at all up front, just by sharing the webinar link. That's all you need to do. You don't even need to know anything about the protocols. You just need to share the link to the webinars.
Yeah. And that's interesting what you just touched upon, because as you know, Ian, we have, as well as the advocates, we have advocate originators. I've been speaking to a lot of our originators who are network marketers, multi-level marketers, and a lot of things they say to me that, they've always had to pay a fee just to, refer someone to those products or services. Well, to become an advocate or an advocate originator, you don't have to pay a fee. And that's one of the, I would say, most asked question I get actually on my weekly webinars. Is there a fee we have to pay? No, there is not. Also, a lot of these network marketers have built their network over a period of time. And some of the organizations they've been working in, now this is their feedback, this is what they have said to me, is, they work hard in building their network up for, to refer for specific products or services. Then the organization is not around, they could be around for 6 to 18 months and then that's it, they're gone. We've been around for a long time, and guess what? We are going to continue to be around for a very, very long time. So I wanted to emphasize that because I think that is so important, Ian, isn't it? And again, here we have, it's Ian pointed out, it's not multi-level marketing. We don't have advocate level 1, 2, 3, 4, 5 or advocate originator 1, 2, 3, 4, 5. It's advocate originator advocate. And here you can see the potential earnings of an originator. Just if one or, just say 5 of their advocates made 10 referrals, and those 10 referrals instruct Ross with a protocol and make a donation fee. And as you can see here are the examples on those figures. But as I mentioned, I do go into a lot more details in my weekly webinars. I'm very conscious of time at the moment. So, but that gives an idea, doesn't it, Ian?
Mm-hmm. Yeah.
Right, I'll go to the next slide. Oh, funny enough, this is what you just mentioned. So just to touch base, really, what Ian had mentioned, there is a webinar invitation with rewards scheme. And
so my vision for this is really simple, right? If we get 1,000 people on our webinar on a Saturday, and they all shared a link to the next week, the next Saturday's webinar on their social media, maybe next Saturday we'll have 3,000, 5,000 people. Who knows how many people we'd have coming? There's no fee. There's no obligations. You just share the link, and then if you get people coming, our system will record how many people came from the link that you've shared, and then for everyone who came, they obviously can't just click on the webinar link and then disappear. They've actually got to watch some of the webinar. So you want them to watch 70% of the webinar. You get £10 off your protocols that you might want to enroll in going forward. If you've got, say if you've got 100 people coming in, you've got 100 times 10. So you've got a sizable amount. You've got 1,000 that you can set off on your protocol. Maybe you'll get 1,000 people coming because you might have an enormous social media network. Yeah. Some of our advocates have got millions in their social media following group. So
huge. Yeah, no, definitely. I know we've got a couple in the UK, and I know we've got one in Canada. So no, absolutely there. And again, here's just some examples that Ian's just mentioned. Just touch base on that. So, okay, Q&A side of things. So as I mentioned at the very beginning, I know a lot of the questions you submitted, I've had a look at those questions, and I would say they have been answered. However, whilst listening to today's presentation, you may have more questions. And if you have, great. Because what I'm going to do, every single person who's attended today, I will be sending out a form for you, and it will be through this particular email address. Okay. And so if you have any additional questions, please add those details on there, add those questions on there. And Ian and Andy in the next few days will go through every single question that you have submitted as well. So I will get that to you guys very, very quickly today.
Okay.
And also I want to say thank you everybody for attending the webinar. What's also very important is feedback. Now, I know we get phenomenal feedback in all our webinars that we deliver. And, of course, we want to, your feedback helps us to improve and create better sessions for you. So the form that I'm going to send out for the additional questions that you may have, and we will get Ian and Andy to answer them, there's a section for your feedback. And if we can have today's feedback, that would be so great. And as I said, we constantly want to improve our presentations week in, week out. And, that message, that your feedback can make a huge difference. Is there anything you'd like to add, Ian?
Yeah, well, there's 2 things I want to add. The first is we are recruiting. So we have many roles available. We're launching all different protocols. For example, this is a protocol. We have many protocols like the council tax, like mortgage foreclosure, many protocols we are launching based on demand. So we are recruiting project managers that can assist us to develop those protocols and then manage them. So it's a project manager that becomes a product manager. And their role will be to make sure that the protocol is being delivered to the members in the most efficient way. There's lots of assistance. There's a huge amount of of coaching and assistance to get the job done. And we are recruiting. We've just recruited 2 project managers in the last 2 weeks, and we want more. So if you are interested in helping us deliver the protocols, developing, I'm not going to say here's a blank sheet of paper, go and deliver it. No, it's just it's filling a role with a very good plan that's been written about how to deliver it, working with our existing team and working with some AI as well, because we are using some AI to get the protocols delivered. And then you become responsible for a protocol. So that becomes your focus to make sure the membership gets the protocols delivered. So that's one thing. If you are interested, then hopefully you can make that known on the form or somehow. And then the other thing I want to say is that every single webinar going forward is I want it to be on demand. I want you to tell me what you want me to cover. You've got 50 research papers in the Ecclesia Law Library. There's more and more being added in there all the time. Do you want me to cover problems? Do you want me to cover problems and solutions? Do you want me to cover different subjects, which I'm writing about at Ecclesia Law? Do you want me to cover anything in this space? The Monopoly Board of Commerce, anything connected to it? Do you want me to cover the Freedom Plan, what we're planning to do with energy, water, food, health, communications? Do you want me to do that? I'll do webinars based on demand, right? So I really want that feedback.
Yeah, 100%. Also, just one thing to add with the form that I'm sending out from today's webinar, if you were in these tax avoidance schemes and, you're interested in this, because as Ian said, it's based on demand, just put in capitals interested, and then we can see that. And that's it, really. So just looking at the time, we are nearly 12:30 UK time. They say time flies when you're having fun. So I just want to thank everybody for taking the time out today and attending this presentation. I hope you enjoyed it. As you can see, so much information was shared. But of course, don't forget, if you have any additional questions, make sure you fill out that questionnaire. And along with any of your feedback or any other information, I think Ian mentioned, the project roles, very exciting roles that they are too. So if you're, just maybe put project manager, it just gives us an idea. And then we take it from there, really. I think that's it from me. Ian, is that from you? I think we're finished for the day. Yeah.
For the moment, yeah. For the moment.
So, For the moment, yeah. I know Ian probably have a little mini break and then he will continue working on, because you do work many hours and 7 days a week. So on that note, thank you, everybody. Have a wonderful rest of the day and weekend too. And see you very soon. Take care and goodbye.
Bye for now.